Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at the financial performance of Massey Holdings Limited, or Massey, for its first quarter ended December 2018. Now, while its performance itself was fairly stable when compared to the previous result, there are some exciting developments on the horizon which could paint the prospects of improved earnings for the group. Let's take a look at some of the performances and these developments. And for the most recently completed quarter, Massey generated an earnings per share figure of just around $1.37 per share, which was in line with its prior comparable quarterly performance of the same $1.37. Revenues declined marginally by just around 0.2% from $3.22 billion to $3.21 billion, whereas operating profits after finance costs declined just around 3% from $203 to $197 million. That was offset by an increase in the share of profits from associates and joint ventures, which increased just around 27% from $26.4 to $33.7 million. And overall profits attributable to owners of the parent, that is Massey shareholders, was fairly constant, just a small decline of 0.3% from $134.1 to $133.6 million. So fairly stable performance there. Now, when we take a look from the profit before taxes, at the profit before taxes by business segment, well, most of the trends remain broadly intact. And as we can see, integrated retail, highlighted in pink, remains one of the major generators of profits for the group. It did, however, have an 8% decline on the comparable quarters from $115.8 million to just around $103 million over that comparable period. Energy and industrial gases in the blue was broadly resilient and has had two very strong consecutive quarters. There was an almost 30% increase in the automotive and industrial equipment segment, increasing its profits before tax from $28.7 to just around $37 million, and otherwise fairly stable performances by the ITC and other investment segment in green, as well as the financial services segment in grey. Now, geographically, Massey remains fairly diversified. However, there is some reliance on the Trinidad and Tobago market, accounting for just over 45.2% of its profit before taxes, as well as the Barbados and Eastern Caribbean, accounting for just about 30%. Now, on the positive side, Guyana is increasing in prominence, with just around 14% of profits before taxes for the group, followed by Jamaica at 7%, and Colombia, which is growing at 4.5%. Now, ordinarily, because of its reliance on the Trinidad and Tobago market, and at a price of $48, Massey is trading at a price-earnings ratio of just around 9 times and offers investors a dividend yield of 4.4%. Now, at a 9 times PE, that's well below the sector average of about 13.6 times. So there is some value on offer for investors. And at 4.4% dividend yield, that's also above the sector average of 3.1%. So again, relative value for investors. Now, ordinarily, this would have resulted in Bourse assigning a neutral rating on Massey, given its exposure and reliance on the Trinidad and Tobago and Barbados economy. However, there are some important developments on the horizon which we think could augur well for Massey shareholders over the coming months. Now, what are some of these performance drivers? Well, in the first case, tax reforms in Barbados would be cutting the corporate tax rate from just around 30% to the vicinity of 5%, according to Massey. And that would be effective at the start of the calendar 2019 year. So that could lead to some increase or improvement in profits after taxes contributed from the Barbados segment. And Barbados in particular accounts for just around 20% of PBT for the group. Now, economic improvements in Guyana, it's no secret that there is a looming energy boom in Guyana, and Massey has been positioning itself fairly well in that particular economy to take advantage of that boom. In particular, there is the opening of the new Massey Superstore in the brand new Movietown facility in Guyana, and that's expected to take place sometime in the first half of 2019, as well as their continued expansion of vehicle distributorships or rather dealerships in the Guyana market, including the commercial space with brands such as Volvo and Mack trucks. Now, expanding in Colombia continues to be a long-term initiative of Massey, and that seems to be bearing fruit. They now hold just around, by the group's estimates, 3% of the automotive sales market share in the Colombia economy. So that we think is another positive. But most notably, the most important, in our view, development that is set to occur over the next 12 odd months is the operationalization of the Caribbean Gas Chemicals Limited plant situated in La Brea. on the Union Industrial Estate. Now, Massey holds a 10% share in that particular project, which is expected to produce annually just over 1 million tons of methanol, as well as 20,000 tons of dimethyl ether, or DME. So with the attractive valuations in mind, as well as several of these performance drivers, the outlook seems to be a lot more improved for Massey, or should be a lot more improved for Massey. And on that basis, we upgrade our rating on the stock from a neutral to a buy. That's it for this week's edition. For more information, give us a call at 226-8773 or to Bourse. Email us at invest@boursefinancial or visit our website at bourseinvestment.com. Have yourselves a great investing week. This has been the Bourse Report.